Are you listening? Damn.
The development of the Takaful industry in Malaysia in the early 1980s was inspired by the prevailing needs of the Muslim public for a Sharia-compliant alternative to conventional insurance, as well as to complement the operation of the Islamic Bank that was established in 1983. It was to a large extent triggered by the decree issued by the Malaysian National Fatwa Committee, which ruled that life insurance in its present form is a void contract due to the presence of the elements of gharar, uncertainty, riba, usury, and maisir gambling. A special task force was established by the government in 1982 to study the viability of the setting up of an Islamic insurance company. Following the recommendations of the task force, the Takaful Act was enacted in 1984 and was the first Takaful operator was incorporated in Malaysia in November 1984. In developing the Takaful industry in Malaysia, Bank Negara Malaysia has adopted a gradual approach which can be divided into three phases. Phase 1 started from 1984 to 1992, started with the enactment of dedicated regulatory law such as the Takaful Act 1984 and the establishment of the first Takaful operator in 1984. The primary focus during this period was the establishment of the basic infrastructure for the industry. This act, which is still in use, is enacted to govern the conduct of Takaful business and requires the registration of Takaful operator. During the phase 2, starting from 1993 to 2000, marked the introduction of competition with the entry of another Takaful operator. This period also saw greater cooperation among Takaful operators in the region, including the formation of the ASEAN Takaful Group in 1995 and the establishment of ASEAN Re-Takaful International Ltd in 1997. This has facilitated Takaful reinsurance arrangements among Takaful operators in Malaysia in the region, namely Brunei, Indonesia, and Singapore. During the phase 3, started with 2001 until 2010, began with the introduction of Financial Sector Master Plan (FSMP) in 2001, which, among other objectives, is to enhance the capacity of the Takaful operators and strengthen the legal, Sharia, and regulatory framework. The section of the FSMP, which relates to Islamic banking and Takaful, is a roadmap towards realizing the aspiration of Malaysia becoming an international center for Islamic finance. This period has so far witnessed an increased pace of development and competition with the licensing of 3 new operators. To further promote the development of the Takaful industry, the Malaysian Takaful Association (MTA) and Association for Takaful Operators was established in 2002. The MTA aspires to improve industry self-regulation through uniformity in market practices and in promoting a higher level of cooperation among the players in developing the industry.
Next, I will explain you about the legal framework for Islamic banking and Takaful in Malaysia. This is currently undergoing the legislative process toward its enactment. The new legal framework would not only streamline the Sharia contracts, it would also ensure that the degree of regulation would commensurate with level of risk that Islamic financial institutions, markets, and products pose to the overall financial system, the Islamic financial system. The Islamic financial system to align to their predicts and expectations accordingly when undertaking Islamic financial business. The history is insurance practice were known before the time of the Prophet Muhammad SAW and had gradually developed. Ibn Abidin 1784 to 1836 became the first Islamic scholar to come up with the meaning, concept, and legal basis of an insurance contract. It was a common practice of the ancient Arab tribes that if any member of a tribe was killed, the concept of akilah was practiced. The practice of paying blood money, random, and society responsibility to establish a joint venture to provide help and aid to the poor were practiced at that time. Next, I will explain you about the development of Takaful in Malaysia from 1984. Takaful Malaysia is established on 29 November 1984. The company commenced operation in July 1985. In year 1985, the official launch of Takaful Malaysia by the then Prime Minister of Malaysia, Yang Berbahagia Tun Dr. Mahathir Mohamad. In 1986, Takaful Malaysia became a public limited company with its share list on the main board of Kuala Lumpur Stock Exchange. In 2004, Takaful Malaysia celebrates its 20th anniversary. In 2009, Takaful Malaysia launched its new corporate logo and celebrated its 25th anniversary. The event was graced by the Minister of Finance, YB Datuk Seri Ahmad Husni Muhammad Hanazalah. In 2011, Takaful Malaysia clinched the COVID Brand Laureate Award 2010 to 2011. In 2011, Takaful Malaysia clinched the COVID Brand Laureate Award 2010 to 2011 in the corporate branding category for Best Brand in Financial Services, ensuring Takaful for the second consecutive year. In 2012, the Jewels of the Muslim World Award in recognition of his contributions towards the development of Takaful and Islamic finance industry was awarded to Datuk Muhammad Hassan Kamil, Group Manager Director of Takaful Malaysia. In 2013, Takaful Malaysia was acclaimed as the best Takaful company in Malaysia at the 7th International Takaful Summit held in Cairo. In 2013, Takaful Malaysia was awarded the best performing stock under the finance sector at the prestigious annual awards presentation of the H Billion Ringgit Club Corporate Awards 2013. Takaful Malaysia is the first ever Islamic financial institution to have won any awards by the H Billion Ringgit Club BRC Corporate Awards. In 2014, Takaful Malaysia won the Best Takaful Company in Malaysia Award for the second time at the 8th International Takaful Summit 2014 held in Abu Dhabi. In 2014, at the H Billion Ringgit Club Corporate Awards 2014, Takaful Malaysia was among the top 3 winners in the following categories under the finance sector. The first one is number 2 for the best performing stock highest return to shareholder over 3 years. Number 3 for the most profitable company, highest return on equity over 3 years. And number 3 for the highest profit growth company, highest compound growth in profit before tax over 3 years. In 2015, Takaful Malaysia won the Best Takaful Company in Malaysia Award for the third time at the 9th International Takaful Summit 2015 held in London. In 2016, Takaful Malaysia clinched consecutively for the fourth time the Best Takaful Company in Malaysia Award at the 10th International Takaful Awards 2016 held in London. In 2017, Takaful Malaysia clinched the HBRC Highest Return to Shareholders over 3 years Gold Award for the third time, second year in a row, and the HBRC Highest Return on Equity over 3 years Silver Award under the finance sector at the prestigious annual awards presentation. In 2018, Takaful Malaysia officially launched an online sales portal called Click for Cover as a beginning of its venture into digital insurance. The launching marked the expansion of Takaful Malaysia's digital footprint by providing a seamless customer experience when purchasing insurance product online. Innovation Award under the Special Awards category at the Malaysia Takaful Association's Takaful Star Night Awards 2019. Race for Cover Award at the Malaysian Takaful Association's Takaful Star Night Awards 2019. Innovation Award under the Special Awards category at the Malaysia Takaful Association's Takaful Star Night Awards 2019. Race for Cover Award at the Malaysian Takaful Association's Takaful Star Night Awards 2019. In 2019, the highest return on equity over 3 years award under the financial services sector at the H Billion Ringgit Club and Corporate Awards 2019. The highest growth in profit after tax over 3 years award under the financial services sector at the H Billion Ringgit Club and Corporate Awards 2019. In 2020, Takaful Malaysia was awarded the highest return to shareholders over 3 years and the highest return on equity over 3 years awards at the annual award ceremony of the H Billion Ringgit Club 2020 BRC organised by the H Media Group. In 2021, Takaful Malaysia was awarded the Best Motor Takaful Company in Malaysia 2021-2022 award by iBanding.com. In 2022, Takaful Malaysia acknowledged and celebrate its best performing corporate agents.
Next, Malaysia's Takaful regulator is Bank Negara Malaysia. Central Bank of Malaysia Act 2009 set out the goals and functions of Bank Negara Malaysia in terms of insurance and Takaful. Bank Negara Malaysia has the authority under both the Takaful Act 1984 and the Insurance Act 1996 to offer a recommendation to the Minister of Finance on whether the respective Takaful or license should be granted or not. It may also give or deny a license to an applicant to operate a Takaful or insurance brokerage business, an adjusting business, or a financial advisory business with or without conditions. Malaysia has stepped up these efforts to promote worldwide Takaful development, whether through equity or managerial involvement. For example, the government has signed a memorandum of understanding with the Islamic Growth Bank to lead the development of Takaful and re-Takaful investment between nations in the Organization of Islamic Conference.
AIA Public Takaful Berhad or AIA Public Takaful is jointly owned by AIA Berhad, Public Bank Berhad and Public Islamic Bank Berhad, a wholly owned subsidiary of PBB. Incorporated on 11 March 2011, AIA Public Takaful leverages on AIA and PBB Group's leadership positions as well as established infrastructure and distribution networks in the insurance and banking industries to drive growth and increase the family Takaful penetration in the domestic market. AIA Public Takaful Berhad are committed to offering the right Sharia solutions to meet the different life stages needs of its customers. The company is the successor to two former Takaful operators, ING Public Takaful Ihsan and AIA AFG Takaful. ING Public was a Takaful joint venture between ING Group and Public Bank until 2012 when AIA acquired ING's Malaysian operations. AIA AFG was the Takaful joint venture between AIA and Alliance Financial Group AFG. Subsequent to AIA's acquisition of ING's stake in ING Public renamed AIA Public, AFG disposed of its interest in AIA AFG. AIA FFG was then merged into AIA Public with a transfer of business completed in 2014. The series of transactions resulted in AIA Group and Public Bank holding 70 and 30% interest respectively in the company. AIA Public distributes family Takaful product via AIA Malaysia's 11,000 insurance agents known as life planners as of 2015 and Public Bank's over 250 branches in Malaysia. AIA Public considers Sharia compliance of its business operations as its most important and strategic priority. They employ a team of qualified professionals to ensure that the guidance and advice received from Sharia Committee is implemented in letter and spirit. Proper structure and processes are in place to review the Sharia compliance requirement periodically.
People in AIA Takaful Berhad are the foundation of their success and the drivers of their promise to help Malaysians live healthier, longer and better lives. The foundation of AIA Takaful Berhad consists of three main organizations, which is Board of Directors, Sharia Committee and Management Team. Their Board of Directors include Independent Non-Executive Director, Non-Independent Non-Executive Director, 2% of Independent Non-Executive Director and Executive Director. For their Sharia Committee, they have Director, Takaful Finance, Associate Director and many more. Furthermore, their business model is based on profit or loss sharing between the Takaful operator and the policy holders. The operator runs all the activities and operation in return for a share of the surplus on underwriting. There are 9 building blocks that describe and assess a business model, but I decided to explain 3, which is value propositions, key activities and customer segments. Value propositions for this model is to play a leadership role in driving economic and social development across the region. Key activities is focused on accident and health insurance. Last but not least, customer segment is healthcare professional. Product that I found in life protection Takaful is a Life Ikhtiar. This is a family Takaful plan that provides financial security to your family in the event that something unexpected happens to you. The plan allows you the flexibility to choose your level of protection as well as the ability to extend your coverage with additional benefits on your individual needs. A Life Ikhtiar provides death benefit, coverage for accidental death, badal haji benefit and surplus for charity. As we aspire to live healthier, longer and better lives, healthcare has never been more vital. When illness hits, growing medical bills can put a strain on your savings. You may get the healthcare you need while safeguarding your money from unforeseen medical bills with AIA's medical insurance and Takaful programs. Product that I choose under medical protection Takaful is a Life Med Regular. This product is a medical plan with no lifetime limit that takes care of your medical needs and it provides lifelong medical protection, no limit on how much you can claim in a lifetime, 3 coverage options and you will not have to pay any portion of your treatment charges.
AIA is based on the Mudarabah General Takaful concept. Basically, this concept apply in the general Takaful and give huge advantage to the Takaful operator and also to the participants. This is the general flow that shows the process from the beginning of the Mudharabah General Takaful. So, in other hand, there are also some issues regarding to this concept, such as Mudharabah is actually a commercial contract, hence it is not suitable for a donation tabarruk-based scheme. So these donations given by the participants cannot become capital for the Mudharabah at the same time. Distribution of the surplus among the participants in proportions of their contributions is like a conditional gift, which is hibah bisawab, which is not allowed in Islam. But basically, so far, this is the best concept that used in a Takaful product. Basically, in AIA, most of their product using the Mudharabah General Takaful concept, which is this concept will give profit to the company or the Takaful operator, and also give advantage and provide protections and also give rewards to the participants. In AIA Public Takaful, the basic governance objective is to ensure all board aware with the duties and responsibilities. AIA has minimum of 7 directors in the board of directors, and the overall responsibilities is to promote the sustainable growth and the financial soundness of the company, and to ensure the reasonable standards of the fair dealing without undue influence from any party. Next, the important and also the difference between Takaful and also insurance is the Sharia Committee Board. The importance and also the responsibilities are to overview all the activities in the AIA and ensure all of it follow the Sharia principles. It also has a distinct responsibilities in the relation of the Sharia matters. So the Takaful is different from insurance because in Takaful they have the Sharia committee members, but in insurance they only have the board of directors and also the management. So basically Takaful is a very transparent company, and also especially in AIA, this Takaful member has 4 members. So all the members has meet the minimum requirements and also pro in their Sharia principles.
From the financial statement of the financial year ended 31st December 2019, we can determine and make comparison of the amount for each of the components from the statements that AIA Public Takaful Berhad has generated in 2019 and the previous year's 2018. Starting from the net earned contributions for a company in 2019, AIA Public Takaful Berhad has earned, while in 2018 the net earned contributions amounted was. It shows that the net earned contributions is increasing. Next, the total revenue for company in 2019 amounted is, while in 2018 the total revenue was. This means that AIA company has made high revenue in 2019 to compare with its previous years in 2018. Besides that, the total expenses for company in 2019 amounted is, while in 2018 the total expenses was. Thus, after deducting the total revenue with the total expenses, the profit or loss before zakat and taxation for company in 2019 is, while in 2018 the company was suffer loss, which is the loss before zakat and taxation was. Hence, it also shows the increment in the AIA's company profit in 2019 rather than in 2018. As a result, the net profit for company in 2019 amounted is, while in 2018 the net loss was. From this comparison, we can evaluate that AIA Public Takaful Berhad was in its best performance of company in 2000. From the financial statement of the financial year ended 31st December 2020, we can determine and make comparison of the amount for each of the components from the statements of that AIA Public Takaful Berhad has generated in 2020 and the previous year's 2019. Starting from the net earned contributions for company in 2020, AIA Public Takaful Berhad has earned, while in 2019 the net earned contributions amounted was. It shows that the net earned contributions is increasing. Next, the total revenue for company in 2020 amounted is, while in 2019 the total revenue was. This means that AIA company has made huge revenue in 2020 to compare with its previous year in 2019. Besides that, the total expenses for company in 2020 amounted is, while in 2019 the total expenses was. Thus, after deducting the total revenue with the total expenses, the profit or loss before zakat and taxation for company in 2020 is, while in 2019 the profit before zakat and taxation was. Hence, it also shows that AIA's company profit in 2020 are higher rather than in 2019. As a result, the net profit for company in 2020 amounted is, while in 2019 the net profit was. From this comparison, we can evaluate that AIA Public Takaful Berhad performance of company in 2020 is more flattering to compare it with the previous years in 2009. From the financial statements of the financial year ended 30th June 2021, we can determine and make comparison of the amount for each of the components from the statements that AIA Public Takaful Berhad has generated in 2020 and the previous year's 2020. Starting from the net earned contributions for company in 2021, AIA Public Takaful Berhad has earned, while in 2020 the net earned contributions amounted was. It shows that the net earned contributions is increasing. Next, the total revenue for company in 2021 amounted is, while in 2020 the total revenue was. This means that AIA's company's high revenue are higher in 2021 compared with its previous year in 2020. Besides that, the total expenses for company in 2021 amounted is, while in 2020 the total expenses was. Thus, after deducting the total revenue with the total expenses, AIA company suffer loss. So the loss before taxation for the company in 2021 is, while in 2020 they earn profit, which the profit before taxation was. Hence, it shows the AIA's company profit has dropped in 2021 rather than 2020. As a result, the net loss for company in 2021 amounted is, while in 2020 the net profit was. From this comparison, we can evaluate that AIA Public Takaful Berhad not in its best performance of company because there's significant decreasing in the net profit or loss in 2021 compared with the previous year in 2020.
Next, I will explain you about the scope of coverage of Takaful Act 1984 and IFSA 2013. Takaful Act 1984 is an act to provide for the regulation of Takaful business in Malaysia and other purposes relating to or connected with Takaful. In IFSA 2013, an act to provide for the regulation and supervision of Islamic financial institution, payment system and other relevant entities and the oversight of the Islamic money market and Islamic foreign exchange market to promote financial stability and compliance with Sharia and for related consequential or incident matters. Next, I will explain you about salient features of Takaful Act 1984 and IFSA 2013. In Takaful Act 1984, due to the fact that Islamic bank needs insurance cover for its own asset and interest arising from the financing and credit facilities, in IFSA 2013, focus on Sharia compliance and governance in the Islamic financial sector to provide for a comprehensive legal framework that is fully consistent with Sharia in all aspects of regulation and supervision.
Four differences of current IFSA 2013 and Takaful Act 1984. The first one is single license Takaful business. The IFSA 2013 requires a Takaful operator with a composite license to separate its family Takaful business from its general Takaful business. However, the Takaful Act 1984 allows Takaful operators to carry on both business under the same company. The affected Takaful operators are given a grace period of 5 years from the appointed date 29 to comply with the requirement of Section 16 Act 1 of the IFSA 2013. Any Takaful operator who contravenes Section 16 of the IFSA 2013 commits an offence and shall, on conviction, be liable to imprisonment for a term not exceeding 8 years or to a fine not exceeding 25 million or both. From this situation, the intention of regulator
is to expand the growth of general takaful business and family takaful business. Further, the regulator intends the takaful operator to compete with the conventional insurance practice. The second one is minimum capital requirements. Previously, a minimum capital requirement of 100 million was required to set up a takaful business. The minimum capital requirement for takaful operators is no longer explicitly defined in the IFSA 2013. Instead, the IFSA 2013 states that the minimum capital requirement will be specified by the regulators. Although the actual impact of this subtle change is currently unknown, this principle-based regulation in the IFSA 2013 may give some scope for regulators to issue capital requirements depending on the nature and complexity of the business. The third one is proper claimant. Section 65 of the Takaful Act 1984 only mentioned that payment of takaful benefits may be made to a proper claimant. A proper claimant is a person who claims to be entitled to the takaful benefits as executor of the deceased or who claims to be entitled to such benefits under the relevant law. The similar definition of proper claimant is available under the new IFSA 2013. The duty of an executor is namely to distribute the takaful benefits according to the inheritance laws applicable to takaful participants. With regard to other categories of proper claimant, the new definition of proper claimant under the IFSA 2013 has included parent or guardian of an incompetent nominee or assignee or who claims to be otherwise entitled to the takaful benefits under relevant law.
In the conclusions and the findings, we found that the takaful is actually plays a very important role in the Islamic economy and also finance industries. It also has the importance to the Muslims because takaful is actually an alternative for the conventional insurance. So Muslims should choose takaful for the instruments. And also we found the takaful give two benefits, which is provide protections and safety for the participant, and also it also give rewards to the Muslim in the hereafter life, because based on the basic concept used in the basic takaful, which is tabarruk concept or known as the donations. So this is the importance, and we find that as a Muslim we should choose takaful product as our daily life and also our daily financial instruments.